Welcome back, my peeps. Have you seen people talking about ICT SMC concepts not working as well as they used to be? I'm sure you've seen this one from Inner Circle Trader himself.
Someone tells you that these concepts will stop working in 2025, they are trying to gain clout. The only way these concepts stop working is when the market ceases to exist.
Dudes like Romeo saying,
I just had a meeting with smart money players in the market. 2024 might be the last year that no curriculum functions as we know it.
first off, this dude is a faker, right? Who cares what he is? I've been posting about the market possibly changing for at least 6 months. If you had said to me 6 months ago, I'd be posting trades using Trendlines, that would have been fighting words. Because I am a SMC trader, but I'm also a trader that has spent a lot of time studying other concepts and trading other concepts before I found ICT. I 100% believe the market is rigged. I believe it is engineered to exploit dumb money. The question is, who is dumb money? Who are these retail traders and what concepts are they trading? I believe that there is algorithms that are seeking to gain liquidity based off of what these traders are doing. I've always believed dumb money is the new traders in the market, the uninformed. So step one to figuring out if my thesis is right is figuring out, are the new money traders, the dumb money, the traders that just began trading, searching more for ICT, or are they searching more for retail-based concepts, quote unquote retail that ICT calls retail? Because by definition, I think what ICT means by retail is the concepts and strategies that most of the traders are trading. Because for the algorithm to be able to manipulate price in a way that is meaningful, it needs to be manipulating price against the majority. So as you've heard in trading, 90% fail because 90% are trading a strategy that everyone else is trading. We're going to use Google Trends. We can figure out if new traders are in fact searching for ICT more, or are they searching for trend lines, trading patterns, and indicators more. From December 2021 until today. Looking at this, you can clearly see that trading patterns was more popular pretty much almost all the way until the end of 2022. And then about a year ago, actually, almost to date, there was a clear cross between the two. Trading patterns became less popular and are kind of like declining on search. And ICT hit an all-time 100 in September of this year. Let's see about worldwide, because you could easily say, well, that's fine. Maybe more traders out of the United States searching for trading patterns. And here you get even deeper kind of understanding of what's happened here. Back in June, when he started the 2022 mentorship, there was a clear cross here. And then here we start hitting the 100, like everyone's in on it. The masses have joined. The boat is full. Like everyone's in on it. We can even go farther and see what the top ones are. SMC trading. Here's the one that I really noticed was fair value gaps. You can see here that they're very popular. Trading patterns aren't the only retail concept, right? Trading trend lines, same thing. ICT, it's at the top. Trend lines are almost no search at all. Let's try another one. This one is shocking. Trading indicators. This one puts up a little bit more of a fight, right? About the same time, January of last year. No, a little bit later. I'd say right about here, June is about when I noticed it actually, is when it overtook trading indicators. We can clearly say that the uninformed, the new traders, the dumb money, are in fact trading ICT concepts. There's still some questions answered, right? Would the automatic trading systems be updated? And are they predatory? So how do you answer these questions? You have to go in and learn about automatic trading systems, trading algorithms. And I have done that. And I'm glad I did. I've learned so much about these. It's really going to open your eyes to what is actually going on in these markets. This is one of the first things that I did. I need to figure out what IPTA is. What is IPTA, the algorithm that ICT is talking about? What characteristics could I find? Here's what I found so far. It is operated by the central bank. Predatory, we'll get into what that means a little bit later. Liquidity seeking and taking. It is market making via distressed traders. So some of these terms you guys won't understand, but as we go on, you will. You have market making, provides liquidity via limit orders based on models of price dynamics and order flows. Market effect increases liquidity. HFT stands for high frequency trading. Then you also have liquidity seeking, which is bridges difference in liquidity across trading venues by providing liquidity in illiquid venues and taking liquidity in liquid venues. Price predictive profits from ability to predict short-term price trends such as momentums and reversals. Relative value spread trading seeks to profit from price discrepancy. We're not going to really focus on that one here. This one, it talks about predatory trading, trading that induces and or exploits other investors. This leads to price overshooting and a reducing liquidation value for the distressed trader. This one's actually a really good paper because it breaks down how they're looking at the market. This right here, it says the predatory trader would like to front run the distressed trader by selling before him and buying back shares after the distressed trader has been pushed down and out of the market. The predatory trader is profiting from the distressed trader's liquidation. The predator can sell his assets for an average price that is higher than the price at which he can buy them back after the distressed trader has left the market. Hence, the predator has an incentive to try to cause the distressed trader's liquidation. So, as you guys know, when price is creating, let's say, equal highs, and then it runs it, we know that the stops are getting ran there, triggering the orders, and then the algorithm is the one that's pushing price up here to have that triggered. So that's what I meant by predatory. Obviously, if there's a predatory based algorithm. And then it goes on to explain how the holdings of the predatory based algorithm and then the triggering of the orders and then the multiple predatory kind of operators in the market will attack these traders together. So here we're answering the first question that asked, are they targeting traders based on an understanding of their strategies? We can say yes, because they are in fact doing that, right? They are predatory and they are attacking liquidity based on where the stop losses are at. And then here it's showing how they use a single large entity trader like an institution. Let's say they wanted to take price lower. That's why they bring it up first to trigger a large trader, D, that then will trigger a C, B, and A, and then it causes this flooding market. So they have to bring it up to bring it down. That's where you hear that, and that's where that comes from. Clarification of what is actually happening here. I had an idea of it, and I've been told what it is, but seeing it for yourself through these papers really drives it home. All right, and then this section talks about further implications of predatory trading, front running. And then here are the mathematics behind the front running. It's pretty deep. I don't understand these mathematics, but I wish I did because it's breaking down how they are able to predict this, not just based off of where they think stops will be, but using the order book, understanding where these traders would be in a loss at and where they would need to take price to determine that loss. Now, here is another one. So I've read all these pretty in depth over the last 2 weeks. High frequency trading strategy based on deep neural networks. So this is something that ICT has never talked about, that these algorithms aren't just based off an algorithm anymore. They're actually neural networks that are much more advanced than he is given credit for. And here are the reasonings for using the different algorithms. You have trader productivity, price improvement, and then all these different reasons, right? So there's a lot of different reasons that they might use these. So then here we have the different types broken down into a little picture here. So you have all kinds of different ones, right? But these are the ones I'm interested in: model-based strategies, and then adversarial predator algorithms. So these two are the ones that I'm personally interested in. I didn't go into all of these. These are financial asset price modeling, classification, predict trend patterns, discover other algorithms, and beat them, sniffing out algorithms. These are ones that I was interested in. And I like this paper because it goes into the different types. You have a wide variety: decision trees, dynamic networks, hidden models, support vector machines, kernel methods, artificial neural networks, and recently deep learning has emerged as a useful technique for asset price modeling. It's just funny, like even thinking about it now. So if you're going to sit here and say that at IPTA, that algorithm that ICT has been talking about for 20 years has never changed and will never change, is kind of naive, isn't it? He's got his own reasons for saying that, and I'm not going to get into that. We'll just leave it at that. But it's only logical to think that they will adjust these because they are adjusting the technology, right? And then here are some, throughout my reading, I would find some portions of these papers that I found interesting. So let's go over those. Act as liquidity takers by trading with an aggressive liquidity consuming market orders. They are two main types. The first one seeks to predict market momentum and incoming order flow and makes profits from short-term market shifts, while the second one tries to exploit the technological structure of the trading networks. Order anticipatories try to profit from information about third parties' trading intentions. So right there it tells you this type of profit motivated, also described as parasitic and predatory, can be further subdivided between front runners and sentiment orientated technical traders and squeezers. While front running and squeezing are considered to be legal strategies and being guilty of market manipulation, we know that this takes place. We see this every single day, right? And then here is another one. We try to describe how traders are able to take out action in a highly uncertain environment to reach return goals. This task can be solved using dynamic programming and reinforcement learning based on MDP. The model accounts for traders' present expectations and uncertain state variables. We describe these and model it as follows. From the trading decision perspective, we can parameterize learning agents using reward functions that depend on state and action. We consider the market dynamics in view of learning agents. So, like that alone, this alone makes it clear as day to me that not only are they using the same ones that have been in action, but they're applying new ones to it. So they are looking to see how traders are functioning in the market, and they are making adjustments as follows. Even goes on further to categorize the traders. So you have high frequency traders, intermediate term, fundamental buyers, fundamental sellers, opportunistic traders, small traders. So they're classifying them, the algorithms that they're putting into the market to predict what traders are doing. So this one, it is saying we can then define the likelihood function for both the strict preference relation and the equivalent preference relation. So what they're talking about here is the probabilistic model is controlled by the parameters, which then fine tunes the level of likelihood that this function is likely to take place. Essentially, we have a hierarchy model at the lowest level. We have a reward function values encoded a parameter vector. At the top level, we have hyperparameters controlling the distribution of the parameters. They're highly complex, and they are definitely 100% undeniably concentrated on what traders are doing and then making adjustments based on what they are actually doing. So here is another one that really interested me, is microstructure trading strategies. I think this one's really cool. The algorithm searches for a particularly large stop loss sell order close to a psychological significant price level, such as $15. When the stock is trading at, for instance, 15.05, the algorithm then submits a substantial sell order at 15.01, hoping that the stop loss order at 15 will be hit. So this is exactly what IPTA does, right? So you could say that it is a microstructure trading strategy, and the algorithm then submits a take profit order at a predetermined level, for example, 14.90. If 15.01 is reached, but 15 is never reached, the algorithm may submit a stop loss order of its own at example for 15.05. I know this may be confusing for some. It's hard for me to fit all the information into a video this size. So you can say that there are 3 speculative algorithms described, right? So you have a momentum strategy, relative value strategy. The process of designing speculative algorithms is arbitrary. There are many ways of approaching this problem. Different variations of the strategy will perform in different markets, right? That's just like how we would set up our strategies. And it says the founder of a prominent algorithmic trading hedge fund explains the process of combining old strategies with new ones in a continuous process. What you need to do is pile them up. You need to build a system that is layered and layered. And with each new idea, you have to determine, is this really new or is it somehow embedded in what we've already done? So right there, it just states what they're doing. They're piling on the different strategies. And then I want to explain what has happened with ICT, for example. Okay, so as new traders start finding out about ICT, they're like, oh, first it's just a small group. And especially when we went from 2022 to 2023, it just skyrocketed to 1 million fucking subscribers now. It's great, insane, 1 million subscribers. That's not to count the ones that haven't subscribed. So at first, the inner circle's small. More traders start hopping in, and now it's starting, the outside traders that are retail are starting to come into the circle, right? And it blows it up because the majority of traders are now trading ICT. So who are the traders that started? These people are usually open-minded, willing to try new things, and they understand that there is an edge in the market, and the edge is there because no one else is doing it. And ICT talks about this a lot in his earlier videos. And then once the herd and the masses are inside the circle, that's when strategies stop working. Just like I'm sure trend lines and channels and all market profile, volume profile worked at one point. But as soon as the majority of traders are using these concepts, they became ineffective because they're going to adjust their algorithms to stop targeting this way and start targeting that way. So who is the herd? Who is the masses? These are usually new traders. And it's just a common fact of anything in life. If everyone is doing something, you probably shouldn't be doing it. And that's why 90% of traders fail, because they're doing exactly what everyone else is doing. They're not thinking outside of the box. All right, so let's go into the charts and see if what I'm saying is true or if it is not. I have done some live trading, so that way no one could say it's only able to do this after the fact, because I'm doing it in the moment. Do retail concepts work? And if they do, which retail concepts work? When I was coming up, I would say 2 years, at least for the last 2 years, these retail concepts didn't work very often and were pretty much just not viable, especially trend lines. Those are ones that really did not work very well at all here. And then here we are on the NASDAQ. Let's go to a 10-minute chart. So very retail here. So you had a trend line, like a channel that worked very well, and then once it broke out of the channel, it back tested it, and then now it's offering support here for higher prices. That is as retail as it gets right there. Now it is up to you if you take this information and you use it in a meaningful way. I have been using trend lines in my trading for quite some time, but you have to understand something. Trend lines are tools, just like a shovel is a tool. Imagine you have a hole to dig and someone offers you this shovel, but another guy says, hey, that shovel is no good. I don't like that shovel. It doesn't work very well. What do? Are you going to dig the hole with your hands, or are you going to use a tool to help you dig that hole? So this is the way I'm looking at trend lines. They're a tool. They're not an all-in-one strategy. Okay, so let's go over these right now. So you have trend lines. Yes, they do work. I have been using these in my trading on live stream for many months. So you have trend line, check. And then do bear flags work? Yes, check. These all I can vouch for. Check bear flag, check channels, check. So these are the ones that I think work. All right, so as you guys saw, I just am fucking killing it right now, just using trend lines. That's it, dude. I'm not using anything else. Just since there's recording, I'm up $2,278. All right, I'm gonna take half off here. Where do we have a dip down here from? Where did it fucking come right back to? This trend line. I'm gonna go long 2. 2 more, now I'm long 4. We need to adjust this because as the trend's going up, it's tightening up. I would say it's probably like that. There we go. Take 2 off right there, and then I'll add it back if we get another dip down here. So I just want to prove to you guys that it works in real time. Check and price and see if it works. I know most of you won't, and that's fine. You know, you guys can do what you want to do, have your opinions. But I have presented the evidence in this video. There is no denying the evidence that I bring forward here. You can, but you're not going to be very bright looking. I'll take one more off there. And then let's see, where does it go to? This fucking channel, bet. Let's fix this channel though, so it's right. There we go. So you guys saw me make almost 3 G's off of a channel. That's it, nothing else but a channel. And then now they just double topped it. Double tops, I hate to say it, guys, but I've even seen double tops working lately. I'm not saying it's going to work right now, but I'm definitely wary because of how often they have been working. I don't take them because I'm still just so about them, but I was like that with Trendlines at first too. And then the more you see it work, the more you start to trust it, the more you see it working. I'm going to go ahead and exit this here. I don't like it anymore. Alright, and here's a different channel. It's a little bit later here in the day. I'm going to take this just based off we're at the bottom of the channel. That's 3 pushes down. Let's see how this channel plays out. Alright, so we're starting to push up here. Now I want to see it break that little bull flag that's formed there. Now I want to make sure that it breaks the top of that flag there. It's very important. Okay, there's the break. And now I'm looking for it to go back up to the other side of the channel, break that previous high. I'm almost done with this evaluation. Only a couple more $100 here to go. Easily pass trader funding evaluations with this kind of concept. Low risk, high reward. There we go. Boom. So you guys seeing this, right? You can't deny it. This is live trading. It's not after the fact. I knew that people would think that, oh, well, it's after the fact because that's the way I would have thought. So here is the proof, right? No denying that these concepts are now working. And there it is. Evaluation passed. So let's check out my balance here. $3,033 trading nothing but Trendlines channels. What do you have here? Another one of those big ass channels. So the fact that we're seeing it on all time frames, from the weekly to the daily, all of them, is a huge sign that the market is changing, right? So in the fact that they're respecting it to the tick, it's precision elements, which is what you would look for in algo trading, right? You would look for precise elements to the price. You can really see it on the 1 hour here. This is about as retail as it gets here. Let's go ahead and look at this. You know, trend up, break, retest, drop, and it starts a new trend here. Move up. Now what do you think is going to happen here after it breaks this? Drop. Beautiful, right? And then now if you connect these two, like this, and this is Friday, December 22nd, 21st. So now what do you have here? Another channel inside of little channels. So you have fractal, it's appearing on multiple time frames. And then you get a break of this big one here, finally. This is Tuesday, that Tuesday we were looking at here. So now you saw the little one with inside the big one. And see how far it's gone down since then? It's because the big one finally busted. And now we're right here. So let's connect these two, right? You can just keep connecting them. And you probably have even a bigger one that's occurring on a bigger time frame here. Oh my goodness. Can you guys see this, right? If this isn't enough evidence for you, let's go to 4 hours so we can actually see it. If this is not enough evidence for you, what I just showed you, you're closed-minded, period. And I wish you the best of luck, but yeah, there's just so much evidence. I showed you guys every single thing you would need to know to understand that the markets have been changing. Now it's on you to go into the price and see it for yourself. Don't take my word for it. Go look for it and check it out. And seeing is believing. The proof is in the pudding. You can't make this kind of stuff up, guys. Like just one last more example here just to show you what I'm talking about. So this is back in July, right when this is exactly when ICT's content went to 100 on the search. This is a 4-hour chart. You've seen it work on the 30-second. You've seen it work on the 10-minute. You've seen it work on the hour. Beautiful, right? Then you can even go get, it's even fractal here too. Low, back test it right there. Look at that, back test it and rally. And you have one to the upside that gets broken right there, but like it's not 100%, but it's very close. And then you have a down one that breaks the bottom of it, breaks it, and then we finally break up onto this one, start a new channel here. Up, bam. And this is where I have all the discounts for the funding companies that I believe in. Right here, once you scroll down, that's where you're going to put your email. For example, you just put your email in there. Subscribe. It takes 30 seconds. If you're interested in getting funded with the companies that I'm funded with, Bulenox has a 72% option 1. Apex, 71% off. So if you're a Forex trader, you're paying $300 for 50K account. With these companies right now, it's about $38. So take Profit Trader, payouts from day one. Top Step, right now it's $50 for 50K, a very good company. Trade Day, payouts from day one. Tick Trader has straight to funding accounts, very good company. So check those out, guys. Hopefully this video helped you. I assume it will, because it's going to put you ahead of the herd, right? The herd doesn't believe this. The majority, the closed-minded ones, are not going to buy into this at all. And they're going to slowly be more targeted and more targeted as time goes on. I will see you guys in the charts.